Okay. Well, what this meeting was about was really we brought in a specialist, research specialist, who studies the world global markets in respect to Nigeria and to Africa. And he also explained to us about how the crisis in Europe, has influenced the treasury bill rates in Nigeria, and talked about how, when and how also, even issues of security can scare investors. Right now, it's not a massive thing because it's connected to certain areas in the north, you know. So, people are maybe a little bit wary of investing in those areas, but generally, it's not really affected Nigeria too adversely. However, this is something that has to be checked, and then also the fact that even globally, or sorry, even in Africa, the GDP, which is contributed mostly, 30% of that is contributed by South Africa. However, the growth in South Africa is about 2-3%. So the global GDP of Africa is a bit low, right? And so, we kind of had, he gave us a picture where we could sort of get a bird's eye view on the financial indicators in Europe, in Africa, and then looking back home, to try and see what are the factors. Okay, Nigeria's economy is improving. However, our focus, and a lot of that is tied to oil exports, which we know, and a lot of that is tied to that. However, the spending in Nigeria, government spending is still very large. And so, where we're supposed to be building a surplus, we're not really able to very well. And so, while we're keeping an eye on this, and the focus actually should kind of move towards agricultural sector and less, focus on the oil. That, okay, fine, it's a bonus, it can be there, but we should start developing other areas. And so that's sort of the kind of picture that he gave us. So we think, as the chamber, we thought that this was a fantastic presentation and a way of helping our members to kind of project over the next year, as in over the next 3 quarters, the next couple of quarters, and over early 2013, to kind of see that, okay, if oil prices stay at this price, we're doing okay. If it falls to this level, what are we doing? If if Greece collapses and it's a sort of domino effect, and Europe is in a huge recession, how does that affect us? Even talking about Asia. So it was really a general picture, and for people to kind of be aware of what is going on, and for us to position ourselves and say, okay, fine, we're seeing this happening in places. How can we protect ourselves? How can we build our economy so that, we don't really suffer adversely when these things happen or not happen? So we're always we always have a picture of the outlook, and we always stay in a position of strength. So that's what's about.
Well, you see, the slower economic growth in Europe is likely to have an impact on capital inflows. So what we saw last week in Nigeria is that if there is a dislocation in Europe, then people will be more cautious in the way they invest portfolio flows. So last week in Africa, in Nigeria, foreigners started to sell T-bills and repatriate their funds. So as a result, there was increased pressure on most African currencies. So this is a risk going forward if there is more pressure in the Eurozone. But the other risk is that if there's slower growth in the US, in Europe, in China, then the oil price is likely to fall. That would be the major risk in Nigeria's case. For now, the Bonny Light oil price is still at $110 per barrel, so we're probably fine. But it's a concern that cannot be discounted.
What would you consider to be the way out of this situation in Nigeria?
But in Nigeria specifically, I think you've always had this issue of boom and bust oil price cycles. So obviously the oil price cannot be high forever. As a result, when it is high, you have to accumulate fiscal savings and foreign reserves so that you can address any further decline in the oil price going forward. Now, the issue right now, obviously, is that the lack of fiscal accumulation is an issue. The sovereign wealth fund bill was passed in May 2011, but it hasn't been effectively launched. So the excess crude account proceeds are constantly monetized and shared among the three tiers of government, which maybe is a good thing if you actually boost capital expenditure, but you also need to increase your fiscal savings. So I think that's really the key message here.
Also, I know you know that the demand for crude oil from the U.S. has decreased. That's demand for crude oil from Nigeria by U.S. has decreased. I think it has now reduced to like 65%. Is this also part of the results or impacts of the slow growth in the economy that we're seeing?
Yeah, I mean, definitively, lower demand for oil will be a function of weaker economic growth in those countries. I think another issue is that in the US, over time, they will try to diversify their resources and their sources of energy. So they want to be less reliant on oil production. So that's clearly a risk for oil-producing countries like Nigeria going forward. But I mean, it's not something that is going to become a major issue next year or in 2 years. But in the long term, that will be a problem. Which means that Nigeria also has to diversify its economy. You have large untapped gas resources, which in fact would help diversify the output away from oil. The agri sector, for example, is I think a key focus area on which the authorities are increasingly keen. And that's very important, because if you rely on one commodity, oil, the day when the price falls, you're basically in a very bad situation.
Okay, just finally, sir, how coupling this with the agricultural development aspects now, how is analytically is Nigeria likely to grow this year based on all of this situation?
Well, I think there was actually a decline in agri growth in the first quarter of 2012. So apparently the harvest wasn't that good. There were issues with rainfall and so on. But I mean, net, the Nigerian economy is still doing relatively well. Even at 6.1%, although it's a decline from last year's growth rate, I think it's still robust enough. I mean, as we saw during the presentation today, some of the countries in the developed world are growing at 2-3% at most. So at 6%, it's fine. But what you want is to have a growth model that is inclusive, sustainable. So not only high growth rates on paper, but growth rates that really change the way the population lives on a daily basis. Growth rates that are associated with infrastructure development, power, infrastructure, roads, and so on. I mean, I think that's really the key. So a different growth mindset, basically.
Thank you very much.